everyone, good morning, good afternoon, and good evening whenever and wherever you are watching us from. In today's video, we are going to solve the balance sheet or the statement of the financial position of the business. I am with Natran Malambo. We are going to prepare the balance sheet together. Okay, so the question is coming from 2018 past paper and it's just 20 marks. We are asked to draw up the balance sheet with a correct title, of course. So these are the items given here. Okay, so it's saying the following details were available in the books of M. Silumbu on 31st December 2016. Okay, so this is what we have. Okay, all right, so the title is very important when preparing the balance sheet. Okay, yes. So the balance sheet is prepared as at, same as the what? Literal balance. So we're going to write the name of the person, which is M. Silumbu. M what? M. Silumbu. M. Silumbu is what? Balance sheet as at 31st
December.
31st December 2016, right?
Yes.
2016, full stop. All right. So, like I said, that this is the question. The following details were available in the books of M. Silumbu on 31st December 2016, and we have these items. The title is very, very important, and the title says the name of the person is M. Silumbu. This should start with the name of the person or company, right?
Yes.
And it is prepared as at, not for the year ended or ending. Now, look at the format here. The first column here, the first column is for what? Is for details. Details or particulars,
Yes.
Details, okay? Then the second column is for cost. All right? Then this one, depreciation,
Yes.
Just write DEP. Now, at your level, we don't have accumulated depreciation. It's just depreciation. And you don't have additional information where you need to calculate depreciation. So here we don't have depreciation. But we just need to show that this column is for depreciation, the loss in value of a fixed what?
Asset.
That time. So this one is net book, NBV, right?
Yes.
What is net book value? Net book value is the cost minus the depreciation, right? That's what that's what net book value is. Okay, it is a difference between cost and the accumulated depreciation. So when you subtract, if I thought you'll be taking principles of accounts, you have cost, you need to subtract the depreciation. Then what you have this side is net book what? The net book value or NBV. Okay?
Yes.
All right. So what are the first items we need to write in the balance sheet? Fixed what? Fixed assets. So here I'll just write the title, our heading as fixed assets. Okay? Underline nicely. Now, when you look at our list of items here or on your screen, okay? On your screen, you notice that starting from the top here, you have net profit, machinery. Machinery is a fixed asset, right?
Yes.
So you have machinery as a fixed asset. Let's go to the next. Stock here, which is on the 31st December 2016. This is also an asset, but not fixed
asset.
This is the current what?
Asset.
Current asset. This is the closing stock. Debtors is also a current what?
Current
asset. Office equipment, fixed
asset.
So you already have two. Let's go. Bank overdraft, current liability. Drawings is not supposed to be there.
Yes.
It's not supposed to be under fixed assets. It's under financed by. Creditors, current liability. Furniture, fixed asset.
Yes.
Fixed assets. Fixed and fittings, fixed assets, right?
Yes.
So we have 1, 2, 3, 4 fixed assets, right?
Yes.
Okay. Let's start with machinery, the one which is on top, right?
Yes.
Machinery. How much is machinery?
11,988.
Are you sure? 11,000.
Oh.
Machinery.
It's 19,500.
19,000. 500. 00 what?
Ngwe.
Ngwe. Because the currency we are using is kwacha.
Yes.
Okay. So 00 what? 00 ngwe. Now, do you have the loss in value of this asset? The depreciation?
No.
No. Okay. Since you don't have the loss in value, you're going to write the same figure in the net book.
In the net book
Value. Column, right? 19,500. 00 what? 00 ngwe. All right. Let's go to the next fixed asset. According to our list, is office
equipment.
Office equipment, right?
Yes.
Office equipment. How much?
12,650.
12,650, right?
Yes.
00 ngwe, no depreciation. The same amount, 12,650. You write last column.
The second one.
We have
Furniture.
Okay. Furniture, how much?
16,500.
16,500. All right. Same amount here.
Yes.
16,500. Now, when you look at what we have so far, you notice that there is another what?
Another
Fixed asset. So it is very important. The first thing is to identify.
Yes.
Identify what you are looking for. If it's under fixed assets, identify all the fixed what? All the fixed assets. It's very, very important to do that. All right. The other. We have the last one.
Fixtures and fittings.
Yes, fixtures and fittings.
Yes.
All right. Fixtures fittings. How much?
13,550.
13.
Yes.
Okay, 13,550.
Yes.
00. For someone to be adding, you should be adding so that you don't waste the time. Okay, 13,550. 00. Yes. Now we are done with the fixed asset. We are done with the fixed assets. Now, by definition, you should know by definition what fixed assets are.
Yes.
The other thing is by answering a lot of questions. By answering a lot of questions, you become familiar with these items. Don't need to think, is this an asset or what? Because you've come across with it. You've come across such item. So draw a straight line covering this. That's the first thing,
Yes.
Then and. Okay, here I'm going to write the total what?
Total fixed assets.
Total fixed assets. Total fixed assets. Okay. Assets. So when you add here, what are we having? 62,200. Like this.
Yes.
Okay. Same amount, right? 62,200. Okay. So you close here, just remain with that figure. All right. Now, having calculated the fixed assets, we can go to the current what?
Current assets.
Current assets. Okay. Current assets. Now, current assets, you should know that current assets, most of the times, if you have all the current assets, if you have them all at your level, they're supposed to be what? Just 4. At your level, 4. Okay, maybe more than 4. Okay, at a higher level, but at your level, just 4. So you should know 4 maximum. Now, stock, which is the closing stock, debtors, cash at bank, which is also known as bank, cash in hand, which is also known as the cash or petty cash. Now here, if you look nicely, we have stock, right?
Yes.
All right, and it's a closing stock. How do we know that the closing stock? Check. This financial period is ending at what? 31st December, and here he's saying 31st December as well. So this is the closing what?
Stock.
Very good. How much?
2,500.
2,500. 500, and this is supposed to be in the middle column here.
Yes.
All right. Then next is data.
Debtors.
Debtors. How much are the debtors?
9,300.
9,300. Okay. Then do we have cash at bank or just bank?
No. We only have cash in hand.
Cash in hand. How about bank overdraft? How about bank overdraft?
We have.
Is it a current asset?
No.
It's not, right?
Yes.
It's a current
BD.
so it's not supposed to appear here.
Yes.
It's not supposed to find its way here. All right.
Yes.
So you can just go direct to cash in hand. In hand. How much?
It's 9.
Cash in hand.
It's
24838.
yes.
2438. Okay. That's all. That's all. You can just add that.
Yes.
So adding to current assets, we're going to have total what?
Current asset.
Current assets. Okay. How much are the current assets? 14,238. Okay. Now, having looked at current assets, we go direct to the current liabilities. Okay. So you subtract them. So you can just say
Less
current liabilities. All right. Now we have two, right?
Yes.
Creditors, and the bank overdraft. So both figures we're going to write in the middle what?
The middle column.
How much? How much creditors?
7,250.
Like this?
Yes.
Okay. Then bank overdraft?
1,100.
100, right?
Yes.
So you can add the two, right?
Yes.
Add the two. When you add the two, it will simply be what?
8,350.
350.
Yes.
What is this figure called? Total
current liabilities.
Current liabilities. Okay? Liabilities. This one. So if we had one item here, would have just gone direct here.
Yes.
You subtract. Okay? It's here because we have more than one. So you need to add, then take just a single figure in this column.
Yes.
Okay. So here, what are we doing? Are we subtracting or adding? Subtracting. So we are subtracting this. Okay. So when you subtract 14,000 minus 8, here, what are we having? 50. Are you sure? 14,000 minus 8,000 is 5,000. Like this, see? Okay. All right, 0, right?
Yes.
Okay. What do you call that figure? The difference between total current assets and total current liabilities is known as what? Working capital. Working capital. Now, to the working capital, we need to add the what? Total fixed
asset.
We are adding here. We are adding. Now, after adding, what are we having? When you add 62,200 plus this, what are you having? 68,088. That's all? Okay. 68,088. What do you call that figure? The sum of total fixed assets and working capital. Net profit. Net assets. All right. Net assets. Net assets. Now, here we can pause. This is the figure which will tell us whether the balance sheet is balanced or not. So just go there to financed by. Think everything will fit here. So just go there to financed.
Financed by.
This business for MC Lumbu was financed by
Capital.
All right, capital. How much is capital?
65,900.
60 in the first column, right? 65,900. Followed by, do you have net profit? It's the first item there. Net profit is 11,000.
988.
So are we adding or subtracting?
We are adding.
If it was net loss?
Subtracting.
Subtract,
Yes.
So we are adding. So net profit. How much? 11,000?
988.
988. So when you add the two, we are going to have what is known as what are we having when you add the two? 880, 80, 77. That's all. 77,888. Okay, then to this figure, we check if we have long-term liabilities, such as mortgage, loan,
Yes.
mortgage, loan. We don't have what? If you don't have, we just go there to the drawings. If we have drawings, we need to subtract drawings. If we check nicely here, we have drawings as 9,800. So we're going to subtract drawings and we're going to say, let's see, drawings. How much?
9,800.
9,800. We're subtracting,
Yes.
Okay. After subtracting, what are we having? So we're having 68,088. That's all. Okay, what do you call that figure? Working capital. Capital employee. Capital what?
Employee.
Working capital, we've already calculated working capital. So this is capital employed. Now, when the net assets figure and the capital employed figure are the same, it means that the balance sheet has what? Has balanced, right?
Yes.
All right. So our balance sheet has balance, and this is good. This is what? This is good. So it means that you've gotten yourself how many marks?
20 marks.
20. So after knowing how to balance it, you should work on your time. Work on what? Time. Which is time management. Time management. You should be able to finish this in less than 20 minutes. This is 20 marks. Less than 20 minutes, you are done with this. If it's 10 marks, in less than 10 minutes, you're done with the trial balance. It's 10 marks, that trial balance. In less than 10 minutes, you are done preparing that one. Very simple. Okay? Because you are racing with time during the what? During the exam. So this is how it is prepared. That's it.